So you've decided to sell that investment property that you've had for some time, and it has appreciated. So you know that if you put the money in your pocket, you're paying capital gains tax on that profit. Now, if you're using those funds for something other than investments, then yeah, you're going to pay those capital gains. If you're looking to invest that into some more property, there is a way to defer those capital gains. It's through the 1031 like kind exchange. And that allows you to defer those taxes, because what we're doing is taking that profit that you've made from that first property and investing it into another investment property. One of the common misconceptions about this is that if I have a single family, then I have to invest it into another single family residence. That is not correct. You can go from a single family to a multifamily, from a single family to a commercial property to vacant land. It doesn't have to be the same type of property. In fact, the property you're purchasing, if it's not an investment property already, as long as your intention is to make it an investment property, it would qualify. So why would an investor do this? One is to preserve equity. That way you're not paying capital gains on that profit that you've made on that first property, roll it into something else. Maybe you'd like to do it for leverage. You can sell your existing investment property and use those profits to purchase a more valuable piece of property, maybe one that has a better rate of return. Another option would be to diversify your portfolio. Maybe you're looking to get out of single family residences into multifamily, or the other way around. It doesn't matter. You can do either one. Maybe you want to diversify in an area. Instead of having all your investment properties in one location or one city or even one state, you want to spread out. Or maybe you want to go the other direction. Maybe you have investment properties all over the country. Maybe you're starting to slow down and you want to pare that down so that all of your investment properties are in a close location to you. Another way to use the 1031 is as an estate planning tool. Maybe you have a large investment property and several heirs, and there may be some contention when you pass as to what to do with the property. So you could sell that property and invest in multiple other smaller properties and then give each property to your individual heirs rather than all of them having to deal with one investment property. There are a lot of different ways to use the 1031 exchange to your benefit and to delay those capital gains taxes. Also, there's no limit to the number of 1031 exchanges you can do. The proceeds from the sale of your existing investment property would be handled by a qualified intermediary. You can pick whoever that is. There are many companies out there that handle that. They would hold on to the funds until you purchase the new investment property or property. There are a couple timelines to be aware of. First, you have 45 days from the day that you sell your existing investment property to notify the intermediary of the property that you're interested in purchasing. From there, you have a total of 180 days from the time you sell your existing property to purchase the new property or property. So those are IRS timelines, and you don't want to go past those because that creates a big problem. That's why it's important not only to have the financing figured out ahead of time, but also know and have an idea of what properties you're interested in even before you put your existing investment property on the market. The key to all of this is having a good realtor and lender that you can work with to make sure everything follows the timeline and there are no surprises and you don't get hit with a tax liability. If you'd like to discuss this more or have any other questions, certainly reach out to me. Have a terrific day.